Hey traders, welcome back to my channel. This is my weekly trading challenge update, and I'm excited to share with you that this has been a profitable trading week. If you are new here, I've started this challenge with US 15,300 Canadian dollars, and I'm now up at least 15%. If I include the money that I withdrew, that is 250 US dollars over the past week, this week, and I think a week, 2 weeks ago, then the returns are much higher. So in this video, I'm going to share with you, in the interest of transparency, some updates, specifically the profit and loss, but also some of the lessons that I have learned trading in this volatile market. But before I get started, I always want to be the first one to say trading comes with risks. So this video is only for educational purposes, right? It is important to understand that I'm trading my own money in this case, and I'm comfortable to make money or lose it at the end of the day. So have that in mind, that if you want to trade, make sure that you educate yourself first. Now, today I'm recording this video on a Friday, and I've wrapped up my trades with a profit of $273. And in this volatile market, you realize that just being profitable is a wonderful thing, because it could have been worse if you lose money, right? So this week I traded vertical put spreads and vertical call spreads, as well as covered calls for Walmart, Sophie, and Apple, all of which turned out to be profitable. But before I get into that, I just want to explain a little bit more about vertical puts, call spreads, and I'll do a separate video about the covered call strategy, because that's something that I'm actually even using for my long-term strategy, because right now the US equities market has been dropping, right? For the most part, most stocks have been dropping, and it's also important for me because as a trader, I also want to only make trades when I see my checklist being ticked off, and not necessarily just because I want to make money, even if the risks are too much. So some strategies that I'm learning now, I can actually generate some money whilst holding the stocks that I want. It's more like having some free cash flow. So what is a put and call spread? I think the most important thing now is to understand that when you are talking about an option contract, you first looking at a security. For example, if you are looking at Apple, right? So the underlying stock, if you have 100 shares, for example, if you are writing covered calls, if you have 100 Apple shares, right? Then I can open the position. In other words, one option contract could be a call option. In this case, if you are bearish, if you are bullish, in other words, you believe that the market is going to go up, and the put option, you are believing that is going to go down. But now, in case of a covered call, now you then open the position by selling a covered call. In other words, you open the position by selling the covered call. You click sell, but in that case, I would have the 100 shares as more like collateral, right? And then when I close the position, I would just then buy back the contracts for the same expiration day. But now, because of decay, depending on what happens, I could then make the profit from that, or just keep the premium. Like I said, I will do a video to explain that. But now, vertical puts and call spreads, I realize that these are some of the strategies, because the US market has been very volatile. So vertical put spread, basically, it's a bearish strategy. I'm looking at, let's say, if in this case, I believed that Apple was going to possibly drop, right? So what I then did in that case, you buy a put option and sell another put option at a lower strike price within the same expiration date. So in that case, I just did the weekly a vertical put spread. In other words, the expiry date was, in that case, 28 of March, right? And as long as, in that case, Apple dropped below $214.14, and my other put option was at a strike price of 230 and 180. So those two put options, in that case, they have different premiums, right? And I know it was, let's say, $1,600 that was at stake to possibly make, I think it was about 2,000. But I didn't wait for it because what I'm doing in this market is very volatile, right? If I see the profit, it was $151. I took the profit. That was it today. So I did it yesterday. The next day, I took my money. I'm not waiting to say I want the 2,000. It's just a simulated, profit to say I might make this amount. Now, for the vertical core spread, it's more like the opposite. It's a bullish strategy where I buy a core option and sell another core option at a higher strike price within the same expiration date. This helps to manage the risk, right? Taking advantage of the potential price increase. Like, for example, the one that I did for SPY, which is an ETF that tracks the S&P 500, is like I bought the core option, the other one, right? Let's say for a strike price of, let's say, 580, and then the lower one with the strike price, let's say, of 400, and let's say 400, and just for simplicity, let's say 480, and then the other one, let's say 460, and then the price, let's say if it's at 462. So basically, it's very easy in that regard, and with some brokers, they can actually show you that this is your potential profit, and these are the conditions and the parameters. So I'm not calculating this off my head. But now, as SPY went up, right, I cashed out. But the most important thing there is my risk is kept to say I'm just maybe risking $300 to potentially make 1.5, right? But if I get into the trade, I see $50 or $100, I take that profit and I leave. That's how I was kind of like trading. And I only trade after I do technical analysis and the stocks that I really understand and that I have been following. So I have kind of an idea of their trading ranges. So that's, a vertical put spread and a vertical core spread. And I will explain in a separate video because covered calls, like I said, they are very interesting. But I am playing Walmart, and it really worked well because Walmart was trading around, let's say, for my average, $85, let's say, for example, $85.97, like the other average that I have. Then I would write to say if it reaches $86, $87, for example, then maybe I'll get maybe $78 for that one contract, and then that's it. If it hits that strike price, I make the profit from the difference of my average and the strike price plus the premium that I've collected. If it doesn't hit that, I keep the premium and I keep my shares. So that's what covered call strategies are. Now, let me just show you here. So, so if you recall, last week, my profit was around at 13.81%. You can see this is in Canadian dollars, but I like to look at this rate, right? But I withdrew $150. Always like to take some money off the table. So I opened another cash account and I will be making some other trades. And I'm just going to be showing you guys this for illustrative purposes. And I have other accounts that I'm trading and investing in, and that's my private stuff. Now, you will recall that I also withdrew, I think that was 100 US dollars, right? In the past. So it's not included here. But right now, when I closed, the market closed today, I was up 15%. And bear in mind that I opened this account in June. In December last year, right? I think around 19 December last year. So this is, let's say, January, February, March. So it's just 3 months. And the S&P 500 over the same period, it has been dropping. Actually, let's say maybe 4% or even now, if you look from the top, it's more than 10% down. So this means that I'm basically beating the S&P 500 in my trading here. But again, this is a small account. It's just, you know, but for me, this is some money. And when I look at some of my plays, you see, I have a position for Walmart, right? And you can see my average price here is $85.98. And I wrote a covered call here. And what this means is I got, in this case, $72 that was deposited into my account for this covered call. And if Friday, March 28th, it doesn't, let's say it hits $87 Walmart shares, they might be called away, right? In other words, I will lose my shares, but I will still make $1, in this case, $1.03, right? So $103 plus this $72. So let's say $175 profit in this week, in a space of that week, right? But if it doesn't, I'm just gonna keep this. So I'm gonna keep on doing this. Now, some of the things that I indicated, you see that here, this is just a summary, some of the strategies that I did for the trade. This is a vertical put spread. You see that I had a strike price of 180 and 230, right? And my average price, they are gone here, but this is what I made, right? 151, because there are two puts that are kind of like married to each other. So I then just closed this and I made 151 on that trade. And then for the other one, this was for Sophie. Sophie, I just made, let's say, $18, 19 minus 1. So anyway, you can read on your own, but this is something that is interesting. So the only position that I am currently holding, like I said, is this covered call where I got premium of $72, right? That's options. It's like one contract, it is 100 shares. So this is $72 equivalent. And these are the underlying shares that I'm holding, 100 shares with that average. Now, the most important thing from what I'm learning here is that when I'm trading, right, these are the major lessons as I wrap up. Now, every week is a learning experience, right? And my biggest takeaways from this week and this year so far is that risk management is crucial. That's number one. With market volatility, managing my risk is more important than ever. So I'm making sure that I keep my trades structured and risk reward ratios. I'm very clear. Now, I'm not going to take a trade without a specific quantifiable risk. What I mean by that is like, I will define my entry and exit level. Basically, I have a trading plan. I want to get in and get out of this. Sometimes, even if I get the profit earlier or I lose, I cut my losses and walk away. Because if you recall, I lost some money on NVIDIA, right? Because I didn't have a stop loss. But trading is basically like I'm just making these small gains, right? And by so doing, you win some trades and you lose some trades. But if I win more and manage my risks aggressively, then that's how you become a profitable trader. And assuming that you have a big account, it doesn't guarantee that you would make more money. But if I start by being consistent on a small account, then, and I can apply the same strategies and with some adjustments, of course, I might be able to grow that account. Now, the second point is using multiple strategies is key. I've been trading a mix of covered calls, vertical spreads, like I indicated, indicating the dynamic market, in the US, because there's a lot of volatility, and I'm not going to be doing naked calls and puts, naked options. I'm just going to trade options, and I've done research about this, and I could be wrong, but I will manage my risk. That's the most important thing. So if it makes sense for me to write covered calls, and then if it makes me to do some other trading strategies, like I indicated, I will apply those depending whether it's bearish or bullish and what I see. Now, the third point is it's very important to focus on quantifiable risk and reward. Like I explained, I avoid naked calls and risk plays. Every trade I take, it has a clear risk reward ratio, ensuring that I'm making high probability trades. Now, the fourth point and the last one is I want to stay disciplined and stick to the plan. it's not always easy because we are human beings. We are creatures of, at least I'm a creature of emotions. But I want to stick to my trading plan and manage my risk. So that's my weekly update. This has been a fantastic week for me because there's been a lot of volatility, and from my other accounts, it has also been a very good, trading week. So I'm so happy about that, and I'm looking forward to this, uh, to hopefully continuing to make a bit of money. I hope this video you found it helpful. Don't forget to like, subscribe, and hit the notification bell so that you don't miss future updates. Let's keep trading smart and managing risks wisely. See you in the next update, and happy trading. Bye bye for now.